All right, so in review the trade this short here. So last week we were looking for price to take out these equal highs. We finally got that. Go to the journal real quick. Let's see. Okay, so we're looking for price to take out these equal highs. First CP was highs, waiting to see how price reacts. Main TP is 25,795. So we took longs around here, around 670. And then, we rode price up to the bias on those highs. So once we finally hit that, we ended up being in this daily fair value gap. So anytime, price sweeps an important level like equal highs, or comes to a fair value gap, an order block, really anything, you don't want to just hop in the trade, you want to see how we react. So we were waiting for the reaction after taking out these equal highs and trading into this daily fair value gap, which we did here. This daily fair value gap marked out in orange, and we see we wicked into it. Now price stayed below the midpoint. Whenever you see the midpoint, it's going to be a very reactionary and important level in price, a very sensitive level. And when you see price staying below the midpoint, that shows weakness. If it's closing above that midpoint, that's going to show strength. Now, of course, you're not going to want to just use that. You want to, have a bearish bias already, and then showing that weakness is going to be extra confirmation. But so swept these equal highs. Now we're seeing what price does. We come into this daily FVG, wick into it, showing no real closure above the midpoint, which would be like right up here, staying below that. Got orange. And so after that, checking to see how price is looking. So we had clear equal lows right here, which everyone who maybe got into this move, their stops would have been right here. So the market is going to seek out that liquidity. So we had equal lows here. Price rejected off of that daily fair value gap. And then, we're showing bearish market structure. So I always put stuff in the journal. So I was looking for this rejection off the daily fair value gap, equal lows below. So daily rejection after equal highs had gotten taken out, price had traded through the new week opening gap, showing that it went slower. Okay, glad I put that in the journal because that's another thing I wanted to point out. So the new week opening gap, of course, be the closing price on Friday and the opening price on Monday, which was, let's see where that is. So right here, this is where price closed out on Friday. This is where we opened Monday. It's the opening candles where we opened at, and we created that new week opening gap. Of course, we didn't hop right in. We waited to wait to see the reaction off price. We came back in to this daily fair value gap, rejection down, traded down a little bit, waited, and then right here is where price is definitely showing you its hand. Look how we trade into that new week opening gap. Huge displacement lower. And the opposite happened last week where we were using that new week opening gap as support. Now it's basically being used as resistance. So after that displacement down, we come into this 1 minute FVG, which is also a 5 minute. So after, like I said, we took out equal highs, rejected off the daily fair value gap, traded through the new week opening gap with strength, and then came back up, retraced into it, immediately rejected lower. That's it's confirmed bearish bias. And then take a look at the journal. So yeah, price traded through the new week opening gap, showing that it wants lower. We're aiming for these lows down here as the first price target. We hopped in at 833, 25,833. And then we're just waiting. Then we created a 15-minute fair value gap. Price came back into it, rejection lower, which even confirmed that bias again. And then now this is that 15-minute gap where that this is that candle that traded into that 15-minute gap here. Rejection lower. Now a lot of people would have had their stops here, but a lot of times the candle that offers entry into either longs or shorts, in this case these are the candles that offer that entry into shorts. Price will come up and sweep that again, which is our usual model that we use, just inversed. And we're waiting for that. So short-term engineered liquidity, buy side was swept again, traded right into that 5-minute gap. This gave us even more confirmation than we were going to take out these lows. It's our A+ setup there. And then we're aiming for this low down here. We took this in Asia, hopped off stream around 3 a.m. The price did go lower, but did have to get some sleep. I don't want to be on stream for 7 hours. So took some profits below this low and set the rest to break even. So it's a risk-free trade after that. And as we just slowly trickled down to our price target, almost at full TP here. And we ended up taking TP at that low. We hit. And that was full TP there off of what we originally tried. So with that trade, I think the most important thing to take away here is your fake moves. I mean, whether you're long or short, like for example, if you're long, the first candle that's going to offer a retracement into that fair value gap, a lot of times price will come back and run that before sending higher. And the same thing inverse here. This is the candle that offered us shorts, or a short entry, our retracement after the move down, our first retracement. All that definitely always gets ran 90% of the time. So after that got ran and we sent lower, that was our A+ entry. Or you could have entered off of the rejection of that 5-minute fair value gap. And then price just rode down all Asia until and all Asia trickled into London until New York. And then we came back up, tapped into, I believe this is this is the order block. So it's the order block right here. These two candles off from that order block. So price came right back up into the order block and then sent lower. And that was that trade. Again, it was just a sweep of highs. Let me go back on trade view. See, again, just a sweep of these equal highs into the daily fair value gap, rejection off that daily fair value gap after taking buy side liquidity, and price trading through that new week opening gap that we created, retraced back into it, rejected down, and then we just based our entry off of the 15-minute gap, and then added some more contracts after we swept that initial retracement leg and rode down to the lows. So that was that. We took this trade here, and of course it would have held to lower, but being 3 a.m. we just hopped off stream. And it was of course done live on stream. But that's the trade there. And I'll upload this to